Here's something that feels wrong when you first hear it. More XRP millionaire wallets are appearing, while the price isn't doing much of anything. That shouldn't make sense. But it does. And if you're watching the charts, you're missing the real story unfolding beneath the surface. And when markets produce contradictions, it's usually because people are looking at the wrong layer of reality. A recent Yahoo Finance report highlights a significant anomaly. The number of wallets holding over $1 million worth of XRP has increased dramatically, even as price action remains relatively flat, hovering in a consolidation range that has frustrated retail investors for months. Most people hear that data and jump straight to one conclusion: price must be about to move. But this data doesn't measure excitement. It doesn't measure demand. It doesn't measure momentum. It measures where the supply is sitting. And understanding this distinction is the key to surviving this market cycle. There's a difference between wealth and motion. Wealth is ownership. Motion is pressure. A wallet can become worth $1 million without a single trade happening, through accumulation, consolidation, or long-term holding. This isn't hot money chasing a pump. It represents high-conviction capital parking itself for the long haul. So this isn't necessarily new capital rushing in. It's often existing capital rearranging itself. We call this smart money positioning. While retail traders are scanning for 5-minute candle breakouts, institutional-grade portfolios are being balanced quietly, off exchange, and out of sight. Markets don't distribute wealth evenly. They concentrate it. Small holders sell. Large holders absorb. Supply moves quietly from many hands into fewer ones. This is the classic redistribution phase described in every major market theory, from Wyckoff to modern on-chain analysis. This doesn't look like excitement. It looks like repositioning. And repositioning happens slowly, silently, and without headlines. It's boring by design. If it were exciting, everyone would be doing it, and the opportunity would already be gone. Price doesn't move because people are confident. It moves because people are urgent. Urgency creates panic, chasing, FOMO, liquidations, forced decisions. Quiet accumulation doesn't create candles. It creates foundations. Foundations that can support the next leg up, whenever that may be. Here's the mistake people make. Big wallets equals bullish. Big numbers equals price soon. But markets don't move on logic. They move on pressure. Pressure only forms when behavior changes, not when balances change. This data shows patience, not pressure. This isn't a momentum signal. It's not a hype signal. It's not a breakout signal. It's a distribution signal. It tells you how XRP is being held, not how it's being traded. In mature markets, wealth concentrates before visibility. Positioning happens quietly. Structure forms invisibly. Public narratives arrive later. By the time the crowd notices, the positions already exist. Media turns structure into excitement. But numbers don't predict. They describe. So yes, XRP millionaire wallets are rising, but it means supply is consolidating. And consolidation is quiet, boring, slow, invisible, until it isn't.